National strategy for Nigeria to responsibly steer the AI revolution towards achieving national goals becomes imperative. At this workshop, Nigeria's Minister of Communications, Innovation and Digital Economy leads more than 120 delegates to a national AI conference to discuss the country's strategy towards leveraging AI for development.
It is our responsibility as a member of this generation, but also as leaders as well, to ensure that we're not just partaker in the use of these technologies, but that we participate in actually shaping its development as well. Because these are technologies that have the significant opportunity to change every aspect of society. And the way I also like to describe it is that as digital technologies at their core is the ability to network.
The National Artificial Intelligence Strategy Workshop is a critical first step to co-create a transformational AI policy and develop solutions geared at accelerating socio-economic growth. When Nigeria's draft policy on AI becomes available, it will join the ranks of 9 other African countries like the Republic of Benin, Egypt, Ghana, Mauritius, Rwanda, Senegal, Morocco, Sierra Leone, and Tunisia that have drafted national AI strategies. TVC News, Abuja.
Let's take a short break. When we return, it will be time to speak with our guest of the day. Stay with politics tonight. Welcome back, everyone. The Naira has been appreciating against the dollar in recent times and has sparked some level of hope in the hearts of businesses and confidence in the Yemi Cardoso-led CBN. But for many Nigerians, all they're asking is, when will the impact of the appreciation of the Naira against the dollar have on the cost, an impact on the cost of food items as well? Well, to help us make sense of it all, I am now being joined by an economist, Kelvin Emmanuel. He joins us from Abuja studio, and Dr. Naimeka Mira, the President and Executive Program Director, the Public Policy Advocacy and Research Council. He joins virtually from the United States. Gentlemen, good to have both of you.
Thank you. Thank you so much. Good to be here.
Let's begin with you, Emmanuel. In the past 3 to 5 weeks, we've seen the Naira appreciate now by about 30%, and that's from 1,915 all the way to even about 1,000 Naira. For some, is 1,050 Naira. Depends on where you're changing your money from, dollar from. But can you tell us specifically what is responsible for this?
Well, I'm not surprised that the Naira has been appreciating, and this is because if you notice very well in the last 3 months, the Monetary Policy Committee, since the President decided to do the needful to, follow the CBN Act of 2007 to raise the quorum to at least 6 members of the MPC, and then the MPC convened, and they actually swung into action to raise the MPR by 600 basis points or 6% in order to tighten monetary policy and reduce what they call the yield curve differential. You've had that migration from Naira to dollar-denominated assets as inflation has risen. It slowed down. And you can see that there's been flows of monies into Nigeria by foreign portfolio investors with yields anywhere around between 23 and 26%. So that liquidity has helped the central bank to be able to sort out the outstanding forwards on commercial letters of credit, on Form A, on dividend and capital remittances. The CBN has said that IATA members who had international airlines have been sorted for the valid claims. Notice very well that the central bank said they engaged a forensic auditor, an external auditor, Deloitte, to audit the $6.8 billion in outstanding forwards, and they found that 2.4 billion of it were actually invalid because they were not backed by any documentation at the time that the request was made at the central bank. So you can see a confluence of factors like the circulars on net open positions for longs that banks are not allowed to take, and then critically, the fact that the Office of National Security Advisor, along with the task force that was set up by the NSA, swung into action to remove the impact of P2P trading on Naira futures for crypto, and how that has played into the fact that the manipulation of the exchange rate has stopped. So all of these factors, the net open position for banks, which was a critical factor because quite a number of tier 1 banks had about $5 billion net long. And the new circular says they're not allowed to keep any amount of money net long as net open positions. And they are obligated to shore up their deposits in terms of the clean lines they maintain with correspondent banks to settle swaps and forwards that they owe for transactions. So all of the impact of these very structural changes, and also very importantly, even if it doesn't look like it's a direct impact, if you notice very well, the circular, which we've been expecting since last year, Q4 of last year, where the central bank has asked the banks to recapitalize the minimum deposit capital to be able to revise their, capital adequacy ratio. And the central bank has said, very importantly, that they are not allowed to use retained earnings or additional tier 1 AT1 as a means to recapitalize, has kind of created a new level of confidence in terms of foreign investors, because the Naira devaluation and depreciation actually impacted on the valuation of the Nigerian banks. So, for example, if you had 50 billion Naira for tier 1 in terms of your minimum deposit capital, at 1,009, for example, that's dropped very terribly, to levels that were not seen anywhere around maybe $30 million. So if you notice that tier 1 banks are now asked to raise by about 10 times, and tier 2 they are asked to raise about 10 times, it's created a new level of confidence by foreign portfolio investors to bring capital into the Nigerian markets. But I think that going forward, this appreciation of the Naira, 45% appreciation of the Naira, is going to be sustainable if the Central Bank of Nigeria is able to collaborate with the fiscal authorities, to make some structural changes, which I'm sure we're going to discuss as time goes on, so that they can, go up from this strategy where there's an over-reliance on the central bank to be able to raise interest rates. Inflation has gone up to 30.2% again. The next MPC meeting, they might decide.
For cutting in, we'll speak more on that in just a moment. But I just want to bring Dr. Mera into the conversation as well, because some have said that, look, this is historic, and this has not happened we've not seen this kind of gains in a short period of time ever in the history of the country. What is responsible for the rate at which the Naira is gaining momentum against the dollar?
For having me. I'll talk about this in terms of policy issues. And one of the most important ones, I think, is getting rid of Binance. As you know, Binance is the vehicle that used to trade in currency. Very recently, I think Binance Nigeria lost, or rather, we have over $27 billion that left the economy. So by clamping down on Binance, we are saving, number one. Number two, I also think that moves that the government has made in terms of getting the NNPC to transfer their receipts directly to the central bank, that has also resulted in increased savings in terms of dollar. I think, like Emmanuel said, payment of backlogs, backlog forex by the CBN also help. And also equally important is the revocation, the recent revocation of over 4,000 Bureau de Change licenses. As you well know, these Bureau de Change people are the ones that are mostly responsible for the irresponsible speculations that go on in Nigeria that makes the dollar seem like the almighty dollar. And lastly, I think that the recent increase in oil production, I think we were somewhere around 1 million and now we're about 1.5 million. That also is helping to increase our foreign exchange. And I think as we go forward, we can also talk about what's the word I'm looking for? The signal that this present administration is giving that we should stop dollarizing our economy.
And Dr. Mera,
I think those.
all right,
Yes,
sorry,
yes,
I'm staying with you actually. I was going to ask you, whilst it seems as though the gains made so far is worth celebrating, do you think that the CBN have actually addressed the fundamentals of exchange rates?
Absolutely. Absolutely, it goes without saying, and I pray that that they continue with this vigor and rigor in the policies that they've instituted so far. I really do applaud the current government and the policies that they've instituted. For the first time, we're actually seeing the dollar being lower in the parallel market than in the official market. So that is very laudable.
Let me bring Mr. Emmanuel into the conversation as well. How sustainable are these policies? Because again, I asked Dr. Mera if he thinks that the CBN has addressed the fundamentals of the exchange rate. He said absolutely. But how sustainable are some of the measures that the CBN has put in place?
Look, Precious, I think there's an over-reliance on the Central Bank of Nigeria, and I've always said this, even if I am quite impressed with Dr. Yemi Cardozo so far and what he's done with structural changes within the Central Bank of Nigeria, and particularly the fact that it shut down development finance completely, that had impairments of anywhere around 9 trillion naira, and is trying to unwind that from the balance sheet of the Central Bank, which would take him a lot. Look, I'm more concerned about the structural side and the buffers for the fiscal authorities. And I'll tell you what, two major things drive inflation, and inflation drives the migration of liquidity from Naira denominated to foreign currency assets. As inflation goes up and that yield curve differential spread widens, you see a migration of flows. People are moving from Naira assets to dollar-denominated assets to protect their money, and that causes devaluation and depreciation of the Naira. So for us to fight inflation, which is a key driver of the exchange rate, we have to go back to the fundamentals. And what are the fundamentals? You look at the power sector, for example, and the fact that a lot of power generation and use today is off-grid. Diesel is down to 1,000 thanks to Dangote refinery, but I will expect that the government will prioritize supplying him feedstock so that it doesn't have to rely on landing crude oil feedstock in Nigeria, which incurs about 28% landing costs. If you look at the fact that today, on the balance sheet of 9 banks, 25 generation and distribution companies actually owe 1.49 trillion naira to the banks, and the Nigerian electricity supply industry is bogged down by debt, by impairment from collections, and you can see the level of power generation which affects businesses and which comes back to inflation, because when they go to have to use diesel and diesel prices are high, they price it into the cost of their goods and services. Then you come to the side of food, which is a major driver of inflation in Nigeria. Food inflation is 40%, which is unprecedented. We've never had 40% food inflation in the history of Nigeria. You look at the fact that we only do wet season farming. We don't do dry season farming because there are no developed irrigation clusters around Nigeria, especially in the north. You look at the fact that 70% of the component for blending fertilizer in Nigeria, ammonium nitrate gas, which gas prices were raised to $2.42 recently by NMDPRA, muriate of potash and phosphates. Phosphates and potash are actually imported into Nigeria. At what exchange rate? You look at hybrid seeds, you look at the cost of land opening and mechanization in Nigeria. These are the real drivers of food inflation, especially for primary production. And then on the other side, the ones that are imported in terms of enterprise goods or durable goods are impacted by the USD exchange rate, and what they call transfer pricing. That's why, for example, you're not seeing prices come down, because there's transfer pricing. The stock of goods you have in Nigeria that are imported at a price that is higher than the current exchange rate. And it's going to take a while for you to adjust that price. So if you want to, ensure that there's sustainability, you have to focus on, amending, restructuring NNPC. And, I've said this before on this program, that NNPC has issues. NNPC is supposed to be the cash cow. Nigeria is not supposed to have revenue challenges. You have to focus on increasing the amount of crude oil production, but reducing the unit production cost per barrel, which is currently the highest in the world at $48.71 per barrel. You have to focus on ensuring that the amount of encumbrances in fossil agreements are lower than 500,000 barrels per day in the production sharing contract and joint oil agreements that NNPC has. You have to give NNPC to an asset manager, the Ministry of Finance Incorporated, to manage, to optimize it. You have to, raise capital for NNPC to be able to do capital investments in floating LNG, export gas pipes, in doing like JVs with companies that want to build fertilizer blending companies or power generation companies or refineries, so that they can bring in income that the government needs to fund its budget, so that the government can rely less on debt, which has an impact on inflation and the exchange rate. So for me, these are the drivers that we have to focus on the long term, medium to long term, if we're going to have sustainability of the appreciation in the exchange rate.
All right, sorry again, I tried to come in because I want to again share the conversation with Dr. Mera. Dr. Mera, do you agree with Mr. Emmanuel that, look, there are loopholes? It is not yet Uhuru. We cannot heave a sigh of relief at this moment. There are loopholes. Some of those loopholes have to do with the fiscal side.
Yes, I agree with Mr. Emmanuel. And in addition to, for instance, just like he mentioned, I think the current consumer price index is at 32%, 32.2 or something like that. And that is up from 31.7% in February. In March, it's at 32.2%. But I think 33.2%. I think what we also have to think about would be to sustain this strength that we're seeing in the Naira, and also to control inflation. Some of the things that the government is doing are already beginning to seem to work. For instance, the price of some of these commodities are beginning to come down. I know the inflation rate is still at 40%, but if you look at the northern part of the country, you see that prices of like maize and rice and so on are beginning to come down. The reason this is because of the strength the Naira is gaining now. So you are beginning to see reversal of trade, so to speak. You are beginning to see goods now coming into the country, as opposed to, say, 6 weeks ago, 2 months ago, when the Naira was very weak, and people in the country, in Nigeria, are more inclined to take their goods to, say, Niger and so on and so forth for sale. So with this, I think the food inflation will come down. I really think that if we check the food inflation in the next 1 or 2 months, I see it coming down to less than 30%, even about 25%.
And I will get to that conversation in just a moment, because there is also a statement from, I think it's the IMF in that regard, and we'll discuss that in just a moment. But Dr. Mera, I'm also this question is also for you. In terms, because you mentioned the cost of items, and there are divergent opinions in that regard. Some people think that, look, the government should go in there, intervene and fix prices for some commodities. There is even a court judgment in that regard. But some people say, look, the prices of commodities is not something that government can regulate. What do you think that, government, or is there something that government can do to ensure that the gains also have impact on a day-to-day cost of items in the market?
Yes, well, you know that sometimes in our great country called Nigeria, people tend to take advantage of situations. For instance, when all this, when the Naira was very weak against the dollar, everybody started increasing their prices. And now, and their excuse is that the dollar is high. So cost of doing business is high. Now that the Naira has gained tremendously against the dollar, you still see that some of the prices haven't come down. I suspect that it will start coming down when market forces start getting into play. But for now, it might not be a very bad idea for the government to temporarily impose some kind of price regulations to get things stable.
Mr. Emmanuel, also speak to this price fixing and commodity prices intervention. Is that something that the government should do?
I don't think the government needs to focus on price fixing in terms of in the retail market. I think if the government wants to use FCCPC to focus on price fixing, it needs to focus on what we call oligopolies, and how those institutional, collusion impacts on the retail market. The crux of price fixing is not on the retail market. The crux of price fixing is on the institutional side of it. But more importantly, economics is demand and supply. It's basic. If supply is higher than demand, prices come down. Demand is higher than supply, prices go up. So we need to focus on supply side economics here. I think it's important for us to pay attention to the structural buffers and not the outcome. Pay attention to the costs and not the effects. And that's the challenge we have. I talked about energy and I talked about food. Energy, Nigeria has 9 items that forms its energy basket, and it consumes about $2.4 billion in FX on a monthly basis. Now, if you can backwardly integrate, now you have Dangote. Dangote can produce transportation and non-transportation fuels, from your Jet A1 to your automotive turbine kerosene, ATK for planes, to your PMS, to your AGO, to your petroleum coke, asphalt, bitumen binders, and so on and so forth. The crux is in supplying Dangote with the crude oil feedstock it needs to go from, 25% to 50% to 100% capacity utilization in his license to operate LTO that was given to him by NMDPRA, so that he doesn't have to import crude oil, because importing crude oil is additional cost. His refinery is 650,000 barrels of crude oil. NNPC's share in that PSC and JOA currently, less FSAs, is not up to half of that amount on a daily basis. So how can the government ensure? I saw the circular where the government says, it's going to go back to the domestic crude oil supply obligations, where, the companies upstream, national oil companies and IOCs are obligated to supply domestic refiners. But the question I have for the government is, where are the spots? There are forwards already for both NNPC in terms of debts they owe and the IOCs and the NOCs. Where are the spots? Spots are like feedstock that is not encumbered by already signed agreements to ensure that you're able to meet up with these domestic crude oil supply obligations. If you can supply Dangote with crude oil, you're going to have more of what he's doing, which is crash the price of diesel to 1,000 naira per liter. If you can supply him crude oil, you ensure that he doesn't have to import crude oil into Nigeria. Now, if you can focus on the buffers that drives food supply and production, you ensure that the prices of commodities go down. You don't need to focus on outcome by having FCCPC go to fight retailers on price or no price. It's transfer pricing. It's economics. It's demand and supply. If some people in the competition ring reduce their price, everybody will be forced to reduce their price. This is the way the market works. So there's no need for the government to expend energy by sending the agency to go and fight retailers and supermarkets because their price is above what it was 3 or 6 months ago. It's demand and supply economics, and it's transfer pricing.
Basically, ensure that there is enough supply, and the supply should be more than the demand, and so the price would naturally just regulate itself. Interesting. We'll take a break now, Mr. Emmanuel and Dr. Mera. We'll just take a break so that Nigerians can have a breather. When we return, we'll continue the conversation as we continue to see the Naira appreciate against the dollar. Stay with
Every weekday on Business Nigeria, we uncover the secrets of the financial world,
breaking down intricate economic and financial matters.
We analyze the stock market, shares, bonds, and the thrilling world of cryptocurrencies.
We unveil and analyze complex policies of the CBN and other government parastatals as they affect your everyday life, keeping you a step ahead every time.
Okay, this is incredible. Facts matter. Our team dives deep to separate fact from popular opinion.
We simplify complex government policies as it impacts your everyday life, helping you navigate the ever-changing financial landscape.
Watch Business Nigeria every weekday at 2 p.m. only on TVC News. First with breaking news.
Thanks for staying with us. It's a good day to be part of Politics Tonight as we look at the Naira rebound and Nigeria's economic outlook, especially under this administration. We've been speaking with Kelvin Emmanuel, who is an economist. He's joining us from Abuja studio, and Dr. Naimeka Umera, who is the President and Executive Program Director, the Public Policy Advocacy and Research Council. Thank you both for staying with us. Dr. Mira, let me tap into, or let's tap from the benefit of your residency in the United States. Speak to the inflow of dollars into Nigeria, especially the diaspora remittances. What impact does this have? Is it positive or negative?
Absolutely positive. You know, the moves that this current administration are making, or is making us over here very, very happy, very, very proud to be Nigerians again. I'll give, you know, for instance, last time I checked, the Naira was voted the best performing currency, not just in Africa, but the best performing currency. When you hear things like this and you're a Nigerian, it makes you walk around with pride. Okay, and we're seeing a lot of moves this administration is making. You know, of course, removal of fuel subsidies. We know that this
Dr. Mera, are you still there? Looks
this
like
current president is just all his predecessors have been talking about during the election.
And Dr. Mera, sorry to butt in. I know that you said, you know, the Naira has been, you know, voted as the best performing currency against the dollar, but it doesn't mean its best performing is different from the lowest exchange rate. There are countries in Africa that exchange, for example, the rand. When you look at the rate of the rand to the dollar, it is quite low. Isn't that something to be more proud of than to be the best performing?
Well, when you think about where we were 2-3 months ago and think about where we are today, the trajectory is very, very remarkable. You know, so I'm looking at where we're going from here, not where we've been. You know, I know Goldman Sachs, for instance, 2-3 weeks ago predicted the Naira would be about $1,200. That's 1,200 Naira to the dollar. Right now, we are looking at Naira dollar below 1,980. As at this morning, I asked around in Nigeria, that's selling for 980. That's very, very commendable. And to me, I can see it going even lower if we continue with this trajectory that we're in. I can see the Naira to dollar exchange going somewhere to like 250, 300. Okay, and please, if you will excuse me, if you will permit me, Precious, let me talk a little bit more, you know, go back a little bit more to what Mr. Emmanuel was saying.
Please go ahead.
Okay, so as far as the economy and the sustainability and inflation, I agree with him that we need to improve the energy sector. You know, I applaud the president once again for bringing this to the forefront, the Nigerian Electricity Act of 2023, which is designed to almost mimic what we have here in America, where states can actually control the electricity supply, the power supply, right? If we can do that and sort of decentralize the power supply to the country. That can actually make the states become more efficient. And when you improve power supply, you improve business. I'm talking strictly from a policy standpoint. The other thing is, just like you said, Dangote is doing great. You know, the advent of Dangote refinery is a very, very good sign. And now some other ones are in the process of coming up, the one in Port Harcourt, the one in Warrior and Kaduna. Now, when we start this, and he also mentioned the new thing from NURC, if I'm saying it correctly, trying to get local producers to provide our requirements locally before they can export. Those are all good things. And yes, even though the oil is going up in price, and we expect it to go up even more given what it's about or what is happening in the Middle East. Oil price going up brings revenue to the country, but it's kind of a two-headed monster, because as oil goes up, the crude oil goes up, so is oil products going up in the country because we're exporting so much refined products. So the push to help to get some more refineries on board in Nigeria is going to be a very, very good thing. That will help drive down the price of diesel. As we all know, diesel is very, very, very central in the economy of Nigeria, both to the farmers, to the manufacturers, and so on and so forth. So I commend all those things, and I pray that this current administration will continue to go in the direction that is currently going. That makes us very happy. Now, if you think about also the other thing that makes us happy are the signals the president is sending. Improvement in security. You know, for instance, he just made it clear that kidnapping is going to be seen as terrorism. That is a very strong signal. Fighting corruption, we see how fast and swift he acted during the Better Edu conundrum. You can tell that this is a man that listens and has a strong pulse on the feelings of the people compared to his predecessor. Like he mentioned, the bank recapitalization is a good thing. It's going to strengthen the banking industry. So, and so on and so forth. So when we see these things going on, we're very encouraged and I'm very proud. We are walking around very proud to be Nigerians. Once again, the Naira is coming back. I saw, for instance, what happened. Was it last week when this celebrity, I forgot his name, Bobrisky or something like that, was convicted for Bobrisky, right? That's his name. You know, Bobrisky was made a scapegoat, but the country, everybody needs to see that we shouldn't take Naira as a joke. Right?
Valuing our own currency, no matter what. All right, so let me bring in. I want to share the conversation with Mr. Emmanuel. Mr. Emmanuel, I will let you respond to this because this is a statement coming from the division chief of the IMF research department, Daniel Lay. And he says that they see inflation declining to 23% next year and then 18% in 2026. This is one area where we have not seen a move. It's still over 30%. How optimistic are you? Are we also on track in terms of addressing the inflation rate?
I think we're on track. As a matter of fact, I think that by June, which is the end of the second quarter of 2024, we're going to see inflation peak. So probably by the July or August reading, you're going to see that continuous month-on-month hike will stop. The pace at which we're going to see the decline, however, I'm not exactly sure. But I'll tell you something. I must commend Mr. Wale Edun on one thing I see that he has done, which is the fact that if you look at the M3 money supply that has been mopped up at between 21 and 25% in terms of yield from both domestic and foreign portfolio investors that has gone into the open money market operations that the central bank is using to reduce the money supply as one of the ways to fight inflation. I hear that Wale Edun has drawn down on the government's 30.6 trillion ways and means of central bank overdrafts. that were violated by the previous government. I was securitized at about 9% interest with a 3-year moratorium that was supposed to begin payments in 2026. Is drawn it down by 4.8 trillion naira, which is a very good step. Drawing it down by 4.8 trillion is important for repairing the balance sheet of the central bank. In the next 2 months, I think we're going to see the 2023 annual financial report of the Central Bank of Nigeria, and repairing that balance sheet of the CBN, which is impaired by 30.6 trillion, in terms of what securitization is very, very critical and important. So fighting inflation, paying back that debt is important to fighting inflation. And it's a signal to the market that he's serious about working with the Central Bank of Nigeria to fight inflation. And the predictions are well in line. I expect, like I said, by July, inflation will peak. And like the IMF said, we're probably going to see headline inflation drop back below 29 or 28% by the end of the Q4 of 2024. So I think in terms of structural changes, in terms of relying less on the Central Bank of Nigeria, I will encourage that the Senate, goes ahead and they pass the amendments that the Chairman of the Senate Committee on Banking has suggested, which is basically to ring-fence ways and means to ensure that the 3 months advances to the government does not pass the advanced stage of 3 months, and it doesn't get into overdrafts that attracts MPRO plus 3. And also ensure that the annual statements of the central bank is published to the National Assembly and is gazetted to the public in line with sections 51 and 30 of the CBN Act. It's very critical and important that these changes are followed through. Some of the other changes I think Wale Edu needs to pursue is actually amend the tax code in line with what the Presidential Committee on Fiscal Reforms has suggested, which is reduce the taxes and levies, harmonize them across federating units, reduce it to 10, to encourage you streamline it and increase ease of doing business index, and also transfer the government-owned enterprises to an asset manager to be able to manage, and particularly in oil and gas, because oil and gas is a cash cow. And WACPICO, West African Gas and Pipeline Company, that NNPC owns about 29% of, and most importantly, the NLNG, which is due to release their annual reports in the next 1 or 2 months. But I will encourage, like, the fiscal authorities, particularly led by Wale Edu, who is the coordinating minister, pays attention to these areas. I think that him issuing Diaspora, domestic FX bonds, be able to mop up FX from domiciliary accounts which are held on balance sheet of the banks as foreign currency, is a very good step. Offer them a higher interest to be able to get that money. But also we should pay attention to the fact that Nigeria currently has an external loan base of about $43 billion US, and our debts, we look at it nominally, is over $100 billion US. So it's important that we begin to pay attention to our revenue generating assets to reduce the focus on debts and reduce the debts to revenue ratio in the budget from where it is at 48% for the 2023 budget down below 35% levels.
As some of the policies that the fiscal side must also put in place to ensure we continue to see the stability. But I want to also get Dr. Mira's opinion on this. We've heard from the IMF, Dr. Mira, they have given their perspective on where they see the inflation rate. But just in general, where do you see, are we at a point right now where we can begin to attract major investors into the economy? What's your perspective on the general economic outlook in Nigeria?
My answer would be yes, very much so. As the Naira continues to gain in strength, as this present administration continues to improve the ease of doing business, registration process and so on and so forth, and as this administration also continues to improve the IRS laws. I was watching Mr. Adedeji, Zach Adedeji, the FIRS chairman, the other day, and he was talking about how the IRS will now become a one-stop shop. He stratified, the big business, medium business, and small business. So the ease of doing business is definitely getting better. Security is clearly improving. I would like to see a little bit more improvement on security, but you can see that currently we're seeing a very good improvement in security. They're using the kinetic and akinetic approaches, and those are very good. So yes, my answer is that major investors are beginning to pay attention, including Nigerians in the diaspora. We are beginning to pay attention. The excitement among Nigerians in the diaspora is very, very good.
Mr. Emmanuel as well, I have a few minutes left. I also wanted to get your thoughts on economic outlook here. Where do you see us going from here? Whether it's, I understand that our GDP is going to grow over 3% this year. What more do you see?
Well, I'm optimistic about the economy. I think the reforms are in the right direction. I just have a few, issues about the way things are done and the pace at which it is done. I have issues with the oil and gas sector, and I've said this over time. I'm particularly not impressed with Project Gazelle and the way it was structured. I think NNPC needs a complete overhaul, and the government needs to hands off NNPC and transfer to an asset manager so that you can start from the process of external forensic audits to business process re-engineering to raising money from either the debt capital market to finance capital projects, or raising money from an IPO through book building, And, I also am concerned about the fact that 62 MDAs are still not under FIRS. Like Dr. Emeka said, you need to, bring the revenue generating agencies under FIRS to make FIRS a one-stop shop to be able to increase the revenue to GDP ratio for tax revenue, I am optimistic about the economy. I think that you're going to see a slight bump in the FX rate, but when the domestic FX bonds are issued and when NLNG dividends, withholding taxes, and corporate income taxes come in the next 1 or 2 months, and also the remaining $1.05 billion from Afro-Exim Offshore Account Bank is paid to the Nigerian government, and when the net reserves are raised to anywhere between $4 and $5 billion, you're going to see more stability in the FX market, because it's going to align and match up with the balance of payments for 1 year, which is very critical to maintaining the exchange rate. But more importantly, it's very critical for the MPC as they go forward to begin to signal to the markets and provide forward guidance to companies and investors.
And in 30 seconds, I want to hear from both of you. And I know that you're both, in the policy and economic sector. I know these are the people who can really give facts and figures. But just do this for us in 30 seconds. How low do you see the Naira rate against the dollar? Some have said perhaps we'll get back to the 750, 700 it was before. But for you, how low do you see it? Let me begin with you, Dr. Umera.
Okay, Precious, I'm so sorry. The audio was very, was kind of distorted. I think your question is how low do I see the
exchange rate?
The exchange rate?
Yes.
With the current trend, I can see this going as low as 150 to 200. If we continue with this momentum, I really can see that. And please, if you don't mind, just accord me 20 more seconds to say that I know that this conversation is mostly about the economy, but we all know that the economy doesn't exist in isolation, right? I'll start by commending the president for instance, for bringing education to the forefront. All the moves we're making now, signing into law the student loan program. I would also like to see more of investment in healthcare. The last time I checked, the healthcare budget was just about 5% of our total budget. If you remember the Abuja agreement of 2001, most of the African countries had committed to bringing their healthcare budget to about 15%. So far, only South Africa and Rwanda are doing that. So I would like to see a little bit more attention paid to the healthcare sector.
You've taken more than 20 seconds. Now I have to also now.
Okay.
Okay. You've taken more than 20 seconds. Let's quickly get, because my time is up. Let's get to Mr. Emmanuel.
Right.
What's your prediction or projection? How low is the Naira going to go, or the dollar going to go against the Naira?
Precious, I'm not as optimistic as Dr. Emeka, and it's very good to share the platform with him tonight. I think the real effective exchange rate is anywhere around 950 to 975. We're going to see that rate bounce between 950, 1,050 within the next 2 or 3 months. It's conditioned on certain factors. If the central bank can raise their net reserves to above $7 billion, then you're going to see it stabilize at between 900 and 950. But if it stays below the balance of payment level for 1 year, you're going to see it bounce between 975 and 1,050 or 1,001 and stay around that level for a period of time.
I said 30 seconds, and both of you took more than that. Thank you so much for your time this evening. Mr. Emeka,
thank you for having me.
Mr. Kelvin Emmanuel, who is an economist, and we also have Dr. Emeka as well, Emeka Umera, who is now more American than Nigerian, because I heard you say 1,200 Naira earlier. Is 1,200 Naira in Nigeria. That's how we call it. And thank you both for talking to us. President and Executive Program Director, the Public Policy Advocacy and Research Council. Thank you both for your time and analysis.
Thank you so much. Mr. Emmanuel, nice to meet you.
Thank you. Thank you, Doctor. Nice to meet you too.
All right, that marks the end of today's episode of Politics Tonight. But remember, you can watch a repeat broadcast of this episode at midnight. You can also get in touch with us on X at TVC News NG, Facebook at TVC News NG, Instagram as well as TVC News NG. You can use the hashtag Politics Tonight. We're also on YouTube at TVC News Nigeria. Thanks for watching. I am Precious Amayu.
Sachets. It has a thick formula, so all you need is just one sachet for your toilet bowl. It gives 10 times better